This conversation was recorded on June 30th, 2021. Some things may have changed by the time you hear it. Welcome to Industry Focus. I'm Nick Sciple. This week, we're taking a dive into emerging markets with a look at investing in Africa. Joining me to break it all down are Millionacres analyst and Africa resident Tyler Crowe and Global Partners advisor Bill Mann. Thanks for joining me, guys.
How are you, Nick?
I'm great. We're pre-recording this because I'm getting ready to head out for my bachelor party / wedding / honeymoon. So I am doing great. Very exciting time. Very busy time. So I'm glad.
So by the time this airs, you might be dead.
I mean, all of us could be. All of us could be. Not me specifically, but yeah. I mean, you're hearing this in the future, right? We're living in the past. We're time traveling to you, podcast listeners. So hopefully things have gone well in the interim.
I hope your bachelor party goes really well, but not as well as that. I hope you have a blast and congratulations.
I agree. I think my fiance would agree as well. How are you doing, Tyler?
I'm doing great. I do have to apologize. As you mentioned, being an Africa resident, every once in a while the power does cut out from time to time. So if I get a little blank stares, that might be the reason.
Awesome. Yeah, well, let's talk about Africa. We're going to talk about what's happening in this huge continent, what could drive it over the next decade or so, and then some investment opportunities. Off the bat, just want to talk about the demographics, because the demographics of Africa really set up nicely for lots of growth coming into the future. Tyler, what can you tell us about what's going on for Africa just from a population point of view? Who lives there?
It's such an interesting question to ask because it is such a dynamic place. Not just like, we talk about Africa as a whole a lot, but it from country to country, it's changing a lot. But it is, as of right now, it's about 16.7% of the world population, with the median age only 19 years old. This is a young, growing, dynamic, hungry continent. I mean, but over the next 40 years, we're expecting population to increase 85%. Where urbanization is going to be huge in this area. We're talking about, like, right now, there are no cities in Africa that are the size of New York City, about 20 million. In 40 years from now, there could be more than 10, and then in 70 years from now, there could be more than 20. The growth rates here are staggering. The urbanization rates are staggering. It is a continent on the move.
It's also a continent, Tyler, that is, it's kind of like saying, how are things, when you say, how are things in Africa, it's a little bit like saying, how are things in North America? There's a vast difference between South Africa and, where you are in the Gambia.
Yes, absolutely. I mean, I've been living here for a little over 5 years. The two countries I've lived in are Malawi and the Gambia, two places that I think most people would consider on the less developed side. That's not an understatement in any way. But you go to places like Johannesburg, Cape Town, Nairobi, Lagos, you're getting a very, very different experience than where you would get in where I have been, and even within those countries, in places outside the cities. That the dynamics, the change that you can get in 100 miles is fantastic. It's just staggering.
Yeah. So when you look at the economy, obviously lots of diversity going on, lots of ranges of development. But when you think about the highlights of Africa as an economy, as a contributor to the world trade today, where does it plug in? What are the major industries?
Well, as of right now, like, if we talk about it on the global scale, most of what Africa is known for is extractive resources as of right now. You got the Zambia copper belt. It's one of the largest copper producing areas of the world, which also happens to be right around the places where we're getting a lot of similar metals. Cobalt, which is one of the huge ones we're talking about with the electrification of the grid, because cobalt is a huge battery requirement. Other oil has always been one of the biggest resources for a long time in many countries across the and no matter where you go, you're going to find some sort of extractive resource one way or another. South Africa, diamonds, precious metals. Even where I was in Malawi, there was a little bit of uranium and timber. Somewhere on this continent, somebody's doing extractives.
Right, and so this opportunity, I guess, as we develop into further throughout the 21st century is to move from this highly extractive farming-based economy towards more kind of developed, modern, technology-based economies moving into the future. So you have this young, dynamic, hungry economy, underdeveloped in some of these areas with lots of opportunities to expand into the future. What can you talk about where they are as far as technological development and what opportunities are there for the continent and maybe specific countries too? Again, we talked about it's hard to generalize. We're trying to do that here, but do your best.
There are 95 companies, African domiciled companies, that are trading on the US exchanges. Almost all of them are on the OTC exchange. So not on the New York Stock Exchange, not on NASDAQ. Some of them are rather large companies. I mean, Naspers, for example, is an $87 billion. Its legacy was as a newspaper company, but they did a little thing about 15 years ago where they put a tiny bit of money into a company called Tencent. And it was one of the best investments that's ever been made. They turned $50 million into somewhere on the area of $100 billion. So there are some really incredible technological companies and investments in Africa. By and large, they are focused in South Africa. Almost everything else that you see throughout the continent otherwise is banking, or it is extractive, as Tyler said, or it is in some form of construction. Those are the primary opportunities that are out there. The other thing that's out there it's hard to buy in the U.S., but you can do it, is a company called Safaricom, which is the Kenyan national telecommunications company that also has something called M-Pesa, which is really one of the really, really neat things that you see throughout Africa in areas where there is very little infrastructure. This is a way of the unbanked of getting bank accounts, being able to participate in the formalized economies.
I know we may be getting a little ahead of ourselves here.
We did. I'm sorry. That's always my fault.
No, because I want to go down this rabbit hole really badly. Having been using mobile money, not necessarily M-Pesa, because this is one of the things that I find fascinating. And if somebody solves it, they're going to make all the money. One of the big challenges you have with these mobile money platforms across the continent is they are carrier specific. So if I am using M-Pesa, I have to use that specific telecom company, and I can only transfer money to the people on that carrier. Example, I'm here in the Gambia. There are 3 different telecom companies. If I using Africell needs to transfer money to somebody on QCell, I can't do it. So I actually have to carry around 2 SIM cards with 2 different accounts. The company that can figure out how to do a mobile payment platform across carriers is going to make all the money. Mobile money is like the most stripped down version of a payment platform you could ever have. You can do a transfer of money using an old T9 Nokia brick phone. They use like a bandwidth within, similar to how they found out they could do text over this like data stream. They basically built a platform where you could exchange money and for goods or whatever from phone to phone, peer to peer, and there was very, very little interaction with an intermediary like a bank. Obviously, the telecom company gets a writ every time, so they get to make a bunch of money off of it. But it's just a more streamlined version. But there are, like I said, limitations to it. They're typically carrier dependent. Some of the fees, depending on who you use, can be pretty egregious sometimes. So figuring that process out and taking that, a very powerful tool in bringing banking to the unbanked and making it cross-carrier, cross-national, that's going to be a game changer for this continent.
Yeah, I mean, that sounds almost like Gen 1 PayPal, right? One of the very first PayPal applications was they could transmit money over Palm Pilots. Sounds like the story you're telling here. If somebody it can solve that, crack that nut of being the PayPal of Africa, that's a big business there.
The reason I actually am interested in Jumia, the company, is not because of the e-commerce platform. It's specifically because of their mobile payments platform. The e-commerce is just the way that they're serving it up and getting people within that ecosystem. If that can take off, I think that is an immensely more powerful tool, an immensely more profitable engine for that company than anything they can do in the e-commerce world.
Yeah, I agree with you there to the degree that the Jumia, which is actually a European company, that's where they're domiciled, but all of their operations are in Africa. To the extent that to me, their e-commerce, that's dead on arrival. Like there's a hospital that I work with, and their address is along Mumias Road near some intersection. That's the address, right? And that is extremely typical for Jumia.
GPS coordinates.
Yeah, exactly. Or you could use those 3 words coordinates, which is something that I've seen used as well. Be all of that as it may, that is a very hard nut to crack. A much better and a much more promising path for Jumia and whatever other potential long-term winners in Africa is going to be payment facilitation and that component of the back office.
Yes. So when you think about companies addressing that opportunity, Jumia, the big one. I mean, other companies that come to mind is PayPal, Square, these type of companies, players in this market.
Safaricom is one that we talked about earlier, and the way that you would participate in Safaricom, unless you have access to the Kenyan market, and very few of us do, would be to own Vodafone, which is its corporate parent, which doesn't give you very focused African exposure or African technological exposure. Millicom would probably be the best way to do it, as they have, as they are once again a European company, but they have a large footprint in Africa in telecom on the network side, and then also on the micropayment side.
I believe it's Orange France Telecom. They have a very large presence in West Africa. A lot of the former French colonies, Senegal, Mali, that sort of region is very high on the French telecom aspect. I have this question for Bill, and I'd love to know the answer. Like, what has prevented the American telecom industry, with all the money they have, taking a shot at some of these emerging markets? And you can't tell me it's responsible capital allocation, because they just blew money on Time Warner and Oath and whatever the heck you want to call that.
Some of it, I love the question. Some of it is regulatory, right? If you think about how the U.S. Telecom industry was set up during the 80s and 90s, we had the local telecom carriers, then we had the long distance carriers. It actually is more, you actually see substantial investment by like AT&T. They have actually made minority investments in other companies overseas. Really the best way to have done so with the American telecom companies isn't through the carriers themselves. It's actually through the cellular tower companies. American Tower primarily. They have an enormous portfolio of assets in developing markets, including in Africa.
Yeah, I know, Tyler, that was a company that you wanted to talk about here, was American Tower. If you think we're going to have e-commerce or digital payments or any of these things, it requires you to connect to the internet in some capacity. And so mobile infrastructure, very important for that.
Yeah, and when we look at cell phone towers specifically, this is what I find fascinating. I am a complete logistics and infrastructure dork when it comes to this kind of stuff, but like, the way American Tower has worked for years is they went to the carriers and said, hey, do you want to own all these towers and be the only one paying rent? We'll take it off your hands.
Right.
It's
We'll mow the
fine. Don't
lawns.
worry about it.
Yeah.
We'll take care of it. And then they got all of these towers with just a single tenant, but they said, hey, why not just rent it out to 3 or 4 at the same time? 4x, the revenue, the returns on these things. And it's been an incredible story in the developed markets like the United States, and a little bit to a degree in, I think, India has been their other big play. They're doing the same thing in Africa, and it's very, very early innings. They're buying from the telecom companies. They're all single carrier tenants right now. The returns on those, not great, Bob, not great. So you just kind of wait, and until once you get a more mature telecom industry with multiple players all engaging on the same tower, the rates of returns on those kind of like that data infrastructure is just going to be ridiculous. I shared a graphic with you guys on like the rates of the rate for a gigabit or gigabyte of data per country. And you can see like as more telecom companies enter the fold, rates drop like a rock. And it's going to happen. When it does, a company like American Tower is going to be there, and they're going to make a lot of money.
Yeah, I believe it is the case in lots of places that I work with in Africa. So I'd be curious in your experience, Tyler. You still pay a per minute charge for connectivity, don't you?
Everything is prepaid when it comes to connectivity on a mobile platform. There are some post-pay options for enterprise clients. The reason I happen to live here, my wife works for the US Peace Corps. The entire office has an enterprise post-paid system. So they are happening. It's very hard for an individual to get on a post-pay. It's just not as available as we would have in the United States.
And if you stop and think of the implications of those types of barriers, right? We at this point, in June, July of 2021, we think of nothing of jumping onto a Zoom call, conducting commerce, having meetings. But if you're in an environment where you've got to pay, where there's that type of tolling, like that is an area, it's a challenge, but it's also an enormous opportunity for companies like American Tower, because that economic model is going to break at some point. It has to.
Go ahead, Tyler.
Just anecdotally give you an example of that is I have my wired internet connection for my house. Wired is a loose term because basically it's wired to a satellite that goes to a cell phone tower. But I have that account as well as 2 hotspots that are backups in the event that 1 or 2 of them goes down for any one reason or another. That redundancy, something that we're not used to in the United States is the comfort. If I am subscribed to Verizon, I don't have to carry around an AT&T SIM card just in case.
Just in case, yeah.
It's a friction thing that only exists in the emerging world, that when those break, it changes a lot of things for people.
So in 2017, I spent a little bit of time in Djibouti. This was actually, Tyler, right before I spent time with you in Malawi. There are 2 pieces of infrastructure in Djibouti that are incredibly important for its neighboring country, Ethiopia, one of which is the port and the rail system that goes into Ethiopia. But running alongside of that is a power line. And at the very top of the power line, and I have an amazing picture of this, is a cable, and it's on a loop. And what that cable is the fiber optic cable that connects the country of Ethiopia with the rest of the world. So when Tyler's saying, hey, in case these things go down, this isn't theoretical. In case things go down is like Thursday twice, and then Friday again.
It happened here. It happened here while we were away for a little while, COVID related. A Chinese fishing trawler cut the only fiber optic cable to the country.
The
And so
only,
they were out of
yeah,
internet for a week and a half. The
Yeah.
only.
yeah, yeah. So these kinds of things are real. They are costly in terms of capital returns, in terms of the amount and the types of commerce that Africa can reliably do. But they are also, for a company like American Tower, for a company like Vodafone, for a company like Naspers, even, they are incredible opportunities.
Yeah, well, to go back to the demographic stuff we talked about earlier, that the second level effect of solving that problem and getting the cost of accessing data down and getting lots of folks connected is the cost of business formation goes down. You can develop a lot of these kind of things a lot easier. And so as you set, kind of put these rails in place, really opens up lots of opportunities for growth into the future and things that you can't predict now as you look at the current infrastructure landscape, what's possible. So I think that's what gets really interesting. You start compounding these things over time, and 15 years down the road, you're firing on all cylinders, right? Before we got started talking, we talked about the China story. If you look back 30, 40 years, right, China, went from being a very, very undeveloped country to now one of the most developed countries in the world over a course of several decades. You could tell a similar story here. What are some things that y'all will be watching when it comes to Africa, say over the next 10 years? Some maybe guideposts, some benchmarks to see how things are progressing.
Yeah, I'll go. So, I mean, there's a lot of things to really unravel with this, but one thing I would love to see is actually seeing game plans from American consumer-facing companies with an Africa attack strategy. There is a middle class. It's growing. It's here, and there is a voracious appetite for American consumer brands. Living in Lilongwe for 2.5 years, for as long as I was there, I never saw less than 12 cars at the KFC drive-through. It was the only drive-through KFC in the country, and it was just, you could never get a spot because it was that long. This appetite for American consumer products, brands, it is there, and it is an opportunity just waiting to be unleashed. Another thing that I feel like it's been a barrier a lot for business, specifically American business, has been something like foreign currency fluctuation and the fact that there are a lot of currencies on the continent. And so having to be in Naira and Nigerian Naira or Senegal being the CFA, it's been challenging, but we're starting to see progress towards more common currencies. There is a 15-nation group called ECOWAS. It's the entire Western Africa region. By 2027, they're expecting to go on a common currency called the ECO. That's going to be Senegal, Nigeria, Ghana, Mali, Burkina Faso, very, very large, very fast growing countries. It is hard to contemplate how fast Nigeria is growing as a population. Bringing these countries all together on a single currency could be a game changer, not just for Americans wanting to do business in this region, but just those countries doing business with each other. There is very, very little cross-border work because they're all anchored to European currencies.
Right.
And so being able to work on a common currency is huge.
Right. To trade between Nigeria and Togo, and but from Lagos to Lome is literally a 40-mile drive. You have to convert currency from Naira to, call it, British pounds, and then back to CFA in Togo. It's expensive. There's so many different things that are very, very expensive. One of the things that I'm looking at, Nick, is and Tyler touched on this, and there's a really interesting way that you can play and invest in Africa is by looking at the consumer brands, the consumer brand companies that are big in Africa. They aren't necessarily all US companies. Nestle is one with a massive footprint in Africa. They even actually have their own publicly traded subsidiaries, like Nestle Nigeria is its own publicly traded subsidiary. InBev, the brewery companies, are have massive African footprints. Unilever has a massive African footprint. These types of companies have gotten so much smarter and put so much more focus into the African markets in spinning up brands and spinning up products that are relevant to the local markets. And I think that that is a really underrated way to get great exposure to these economies. And at the same time, as Tyler mentioned, and I would emphasize, you're getting exposure to Africa, but you're getting European/American corporate governance and minority shareholder protections.
Excellent. Well, thank you all so much for joining me for this conversation on investing in Africa. I hope our listeners enjoyed it as well. I hope I'm still alive when this airs, Bill. I'm betting on it. I hope all our listeners will.
I'd bet on it too. I'm not taking the other side of that.
Tyler and Bill, thank you all both for joining me. Can't wait to have you all on again sometime soon. As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed. So don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for mixing the show. For Tyler Crowe and Bill Mann, I'm Nick Sciple. Thanks for listening, and Fool on.